US defense has dominated global markets for so long, you're having a natural diversification away from that. So I think you need to be much more heavily weighted to Europe and Asia as a result of.
Hello, you're watching ProAct. I'm joined by HANetf co-CEO Hector McNeil. We're talking about the future of defense Indo-Pacific ex-China UCITS ETF. Hector, great to speak with you. Europe's rearmament story has dominated headlines. Why should investors be looking east, and what are they missing about the Indo-Pacific defense opportunity?
Yeah, nice to see you again. I think the reality is obviously when there's crises around the world, the eyeballs tend to be on that region and that crisis rather than seeing more generally what's going on in the medium long term. And obviously, there's a lot of preoccupation, as you say, with Europe, with the Iran crisis. But I think it's really hard to ignore the Indo-Pacific segment. And what's really interesting is that when you look across our range of defense ETFs and broader to other people's defense ETFs, actually the Indo-Pacific product is actually the best performing in Europe year to date. And a lot of that reason is because the South Korean segment of the index is performed really, really strongly. So you've got companies like LIG Nex1, which is up over 100% year to date. Korea Aerospace is up around 70%. Hanwha is more than 50%. By comparison, when you look at European North American names such as BAE Systems or Lockheed Martin, they're up 25% over the same period. So you're seeing a massively outsized growth in the markets across that world. So you've got a big growth profile there, but also you're seeing it not just in the South Korean markets. It's a clear example, but you're also seeing it in other markets as well, whether it's Singapore, whether it's in India. India in particular has got a big focus on Make India policies at the moment, in their procurement plan, which is obviously putting a lot of money into the local sectors. Great companies like Bharat Electronics, which is massively benefiting from that. Taiwan and Singapore, as I mentioned, are two further strands to it. Cross-strait tensions have been a big push towards that, and Singapore, you've got very, very high defense budgets, and that's supporting companies like Singapore Technologies, which are focusing on sort of like, what we like in the defense sector, as well as just the industrial side, is cybersecurity and smart defense solutions, which I don't think investors should ignore from that perspective. So I think, and one thing that's really interesting in our Indo-Pacific Defence UCITS ETF is we've actually added a really strong partner to this product. We've added Kotak, who are one of India's biggest asset managers and one of the biggest banks in India, and they've got assets of around 88 billion. And they've been around since 1985. So we're hoping they're going to bring a really strong local emphasis and insights into that opportunity. And certainly, India being a core part of the component, but also regional as well. We think they're going to bring a lot of good insight for us to take that forward.
India, Singapore, South Korea, very different markets with very different risks, Hector. How does the index balance exposure without concentrating too much on one country?
Yeah, so I mean, it does have caps on stocks and caps on countries. So you will see some concentration in there, but it does naturally diversify. I mean, one country we didn't mention was Japan. I mean, Japan has the fourth biggest navy in the world. Obviously it's challenged by North Korea, China and Russia, within its sphere of influence there. So, it's changing its domestic constitution to allow it to not just defend itself, but also to be able to be offensive as well. So I think then we haven't talked about Australia and New Zealand as well. They're both very active. We know the AUKUS projects between the US, UK, and Australia when it comes to nuclear submarines. So I think that whole region that is naturally diversifying itself, Stephen, because it's all reacting to predominantly the China threat. So from that perspective, I think I think the index can do its diversification methodology, but I think the way that the market is developing and panning out, you're going to get a natural diversification there anyway.
And Hector, just a final one, would you use this ETF alongside your other future of defense ETFs?
Yeah, I do. I think you need to have a sort of macro view on defense, particularly things like the NATO alliance, the Asian countries ex China, and also in Europe as well. As I mean, we're strong proponents that Europe is definitely been resting on its laurels. I think it was Donald Tusk said 600 million people, i.e., Europe, is relying on 350 million people, i.e., the US, to defend it against 180 million people, i.e., Russia. When you look at those numbers, you realize it's ridiculous that, Europe isn't stronger, both, from a defense perspective and a world positioning perspective. So I think each of those have their own interesting outcomes. And I think actually, allocation wise, I think that because US defense has dominated global markets for so long, you're having a natural diversification away from that. So I think you need to be much more heavily weighted to Europe and Asia as a result of that. So yes, I think they all have a right to be in the portfolio in their own rights.
Hector, thanks as always for your insights. Great speaking with you.
Thanks very much, Stephen. Take care.
You too. Hector McNeil, co-CEO of HANetf.